Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson, Martinson Ag. We were leaning mostly lower over in the livestock futures on the close today, higher in soybeans, mixed in corn and wheat. And Randy, let's start off with soybeans since we did post a higher day again. How much of it was follow through just because we had some report hangover from the bullishness of both quarterly stocks and acreage numbers last Friday?
I think a lot of it was. Right now soybeans are kind of in that quandary where they know USDA is going to have to come in and make some adjustments to our old crop numbers in the next crop production report. So we've either seen lower production or we're going to see stronger demand, one of the two, to trim the old crop supplies. And it also tells us that we need to buy some acres for new crop soybeans. So that, I think, is what kept the soybean market stronger. We did see some spillover from the bean oil market as crude oil gapped $4 higher in the overnight because of that surprise cut in production by OPEC. That came in to help support the market as well. And there probably even was a little bit there to do with the fact that we're seeing some really poor yield results coming out of Argentina.
Yeah, if that was the case, though, I would have thought soybean meal would be higher as well. But maybe there's just some meal oil spread unwinding there with that big rally in the oil market.
That could be, but you're right. Yeah, if it's all about Argentina, we would have seen the meal market go up as well. So I think that's why it was kind of a secondary help as far as the soybeans are concerned.
Right.
But yeah, we've been seeing meal have a pretty good performance. Oil hasn't performed well, so it could just be some spreading there because of what's going on in the crude oil market.
So after the stocks figure from Friday, it looks like our ending stocks are probably under 200 million bushels on soybeans. How much higher do we have to go to price that in, do you think?
I think we need to get that old crop up around $15 is probably going to help us a little bit. We're not going to see a lot of demand short term because Brazil will kind of capture that. But I think on the new crop side, we need to get that market closer up to $14. I don't know if going over it, we can go over it, but I definitely think we can get back up to the upper end and see 13.85, 13.95.
So corn futures initially did the plus side with old crop, obviously continuing to digest the lower quarterly stocks there as well, but it ended a bit lower. So what happened?
I think corn saw a combination of things. I think, part of it was the spillover from the wheat market once it started to turn. I think that pulled it down. And corn has the acres and, it's getting planted right now. So it's not one that's going to come out and lead the market or lead the force, but it's going to be one that plays a follower. But I also think that we did see some hedge selling once we got above these levels, especially when you look at it for old crop. I think we just saw some selling taking place that drove the prices down.
Yeah, plus we're up at a level we probably are into resistance there with a lot of different key moving averages, aren't we?
Oh, we are, especially when you look at the May contract. And, there's an incentive to sell. If your elevator's still going off the May contract, there's an incentive because it's a 20-cent discount, 25-cent discount to July. So I think that's going to bring out some of the bushels too.
What about your thoughts on selling new crop and at what level? Because not that you're going to get 92 million acres planted for sure, especially up in your area of North Dakota where you're under a blanket of snow. But if you have ending stocks that push above 1.5 to 2 billion bushels, if you get good production this year, what could that do to prices?
Well, it definitely is going to depress the price if we get that kind of production and those kind of stocks. So, right now, corn is going to be a follower, like I said. It's not going to be the leader because of the potential of those acres and yield. But I think if we get up into the upper end of fives, that's where a guy's going to have to be pricing corn. Anything near that 585 to 595. I don't think we can break above six at this point.
So we'd had some double-digit gains to start off the day, but we faded those as the day went on. So what was the issue there?
Well, I think that was twofold. In Minneapolis, I think we saw the market fall because we crossed over $9 and we did run into a little bit of hedge selling pressure and some technical. The market is overbought. Chicago was able to hold on to some gains, and I do think part of the other what caused the market to kind of fade is that we saw some unwinding of long anything else and short Chicago wheat spread. So I think Chicago was the buy side of the spreads, and we saw Minneapolis and Kansas City the short side.
We do have winter wheat ratings out here this afternoon after you and I do this interview. So it'll be interesting to see where those come in at and how the market reacts tomorrow, I think.
Oh, most definitely. And, then the next week's going to be important too. Right now we're looking at dry conditions for the southern plains. We're looking at extremely wet conditions and more snow for the northern plains. North Dakota, Minnesota, South Dakota doesn't look like it's got the most advantageous weather forecast right now.
Yeah. Cattle did see some profit taking today after making new contract highs on Friday. Do you think it's just a one-day blip here, or is there more to it?
I think there'll be more to it. I mean, I would expect that we'll see a little bit more of a retracement, probably $3 to $5, and then we could find some support in that market. But again, supplies are tight. They're going to get tighter. And if this storm really does come into play that we're talking about for Tuesday and Wednesday, it's going to do some damage to the feedlots and to the cow-calf operators that are out there.
The market's been kind of making contract highs, and then you see consolidation as it waits for cash trade to develop. But boy, you can't really expect to have the sharply higher cash again this week like we did last week, can you?
I wouldn't expect it. I think it was, Packers got short bought. They wanted to bring in product ahead of this storm, and I think that's really what helped push the market last week. So I'm not looking for cash to trade that high this week, but
Okay.
in another week or 2 weeks, we could possibly see it as we're going to start to see some, really slow down in movement.
All right. Thanks for joining us, Randy Martinson with Martinson Ag, and that's Markets Now.